What's up, traders? I'm Hotshot. I am not an educator. My educator is ICT. For free education, check out his YouTube channel, The Inner Circle Trader. With that being said, this channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. I am not a financial or trading advisor. Please trade at your own risk. Now, I do want to say thank y'all for the 108 subscribers. That's awesome. Last video was in the 90s. Pretty awesome. I do want to mention that our best video our most popular video right now is it's the ICT checklist. Watch, it's this one right here. This is our most popular video, about to hit 400 views, ICD daily bias checklist. If you haven't watched it, go check it out. Today we're going to do another video literally just like that, another ICT daily bias checklist where you can understand daily bias. This time though, we're adding ICT's purge and revert method. And once we come across that, I'll demonstrate purge and revert. I also have a document for that as well that I will leave in the description down below, as well as a daily bias checklist document. So to get started, we're going to go ahead and just click to spin. We're going to choose a random pair to go ahead and demonstrate this on. Looks like we're going with GBP CAD. So let's go ahead and come over here. Let's go GBP CAD. Do forex.com. Okay, so we're going to go to the daily. We're just going to scrunch it up. So that way we don't know what price is doing. We literally have no idea what price is doing around here at all. Okay, so we're going to go back in time and we're going to do the replay button. Boom. So at this point in time, we are in 2021, February 23rd. It was a Tuesday. And we literally have no idea what is going to happen to the right. Okay, so daily bias. If you don't know what daily bias is, this is the next draw on liquidity. You want to try to get a read on where price is more likely to draw to next. Is it going to draw higher to an old high or lower to an old low? And until it reaches that, you stay with that bias. This allows us to go in each day and anticipate either an up close or down close candle in alignment with that bias. Okay, so step one, to read daily bias, you want to first identify the most previous run on liquidity. This is an obvious swing high or low. And anytime daily runs out sell side or buy side liquidity, price is likely to either retrace back into the range toward internal liquidity, which is an internal swing high or low or fair value gap, or reverse, creating a market structure shift plus displacement plus a fair value gap, or it can consolidate, then continue expanding. So in this situation, we'll go neutral and we'll implement ICT's purge and revert approach and wait for the market structure break to confirm our new bias. And I'll explain more about that. But from that point on the run of liquidity, you want to recognize what phase daily price is in. Is it retracing, reversing, expanding, which ICT says is spooling? That's actually the best phase to go in and hunt for what's going to be explained below in 2, 3, and 4. But if none of these three, it's deemed consolidation. And until we can recognize a different phase, our bias will be neutral. But this allows us to know what kind of candles to anticipate. The current phase you are in is your bias, okay? So we want to go and identify the most previous structure run, the most previous liquidity run, I mean. And it's literally around like swing highs. Look at, you can see that there was a lot of these relative swing highs right here that just got ran out. There's this high right here that it's heading towards now that it hasn't ran out yet. It could potentially run out. And then if we just extend that forward as well, oops. So we'll label all this liquidity. That's some money, that's some money. Okay, so previously, price ran out liquidity. There's more liquidity sitting down here. Okay. So in this situation, price ran out liquidity and is still expanding. Okay. How do we know it's expanding still? Well, this is where we could implement ICT's purge and revert. So to kind of understand what purge and revert is, I want to go back, if y'all don't mind. We do know what these three candles are, but we're going to go back to the candle that ran out this liquidity high right here. Okay, so purge and revert. On daily, the very candle that of the day that runs liquidity, that is a purge of liquidity. Once we see that purge occur, the day of that purge, we want to start looking backwards 3 days, midnight to midnight. Look for the last 3 days highs if you're long and lows if you're short. And you will have all the liquidity pools needed to target make money that you could use for trade entries. You don't need anything other than that. Don't need an IPDA 20-day or 60-day look back period. The market does not look back 5 to 20 years ago. It looks at predetermined price levels, and that's why the algorithms operate the way they do. So first you want to just drop to your 1 hour in this situation, and you want to get the last 60 days. So on this candle that took it, we're going to delineate midnight, 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 midnight. Okay, so if this was the day that did it, we look back 1 day, 2 day, 3 day. Okay, so we'll just label this as our third day. This is our second. This is our first day. Okay, so we have a 3 day look back. So in this situation, the lows of these days will be like our take profit areas until price retraces back 50% of the range from this candle to this candle. Okay, so once it comes into the 50%, that is equilibrium. So in order for price, so a bearish example, let's see. So I wrote down a bearish example whenever I was going over ICT, watching the video and taking notes. I didn't rewrite it for a bullish example. What we are in the market situation we're in right now, it's going to be a bullish example. So I'm going to read this, but I'm going to switch all the bearish with bullish. So that way it might be confusing as I'm reading it, and you might be like, why did he say a word that isn't there? Just know that I'm reading it in a bullish example perspective, okay? So the day of the purging, the day it runs above that old daily swing high, when that happens, we count that as day one. That is day one of that event of purging. Okay, so I got this wrong right here. So this is day one, this is day two, and this is day three right here. Okay, so you can see that day three lines up perfectly with the 50%. Okay. So we wait to see if it goes lower and reverts, not reverses, not a reversal, revert. What is it reverting to? Sell side. Okay. Remember, it's a bullish example, not a bearish example. This is written as a bearish example, just to remind y'all. Okay. Sell side. So it draws to buy side liquidity. That's the purge. This is the buy side liquidity that it just purged. Okay. What was I reading? That's the purge, and that's counted as day one. From that day's midnight, look back to the midnight before that is day two, and the midnight before that, that is day three. That's our look back day on the day of liquidity purge. So the day it occurs, you want to look back 3 days, drop to 1 hour time frame. Now that draw to buy side, that's the purge. Is a purge only if we wait. That's the purge. That's the purge. It's a purge only if we start to move away from it. How do we tell? Well, the day that purges buy side liquidity, we will annotate from midnight the highest wick, aka that day's low. So the lowest wick, I'm sorry, the lowest wick, aka that day's low. If that low is traded to and through, that is a market structure break, only on the basis of a liquidity purge. Doesn't mean it's 100% successful. It just means that from an algorithmic standpoint, if we're looking at logical steps of processes, it's a matter of looking at a recipe for a model that would be unfolding dynamically. Now, when that low is traded through for the market structure break, and it could happen the next day as well, doesn't have to happen the same day. We don't need price to close below it. We don't need that because the narrative is it ran above an old high for liquidity. If it's going to go lower, the algorithm will start its macro. And that's pretty much a short order of processes that begin and go step by step. It's like a small algorithm in a sense. And the larger algorithm that creates and controls price action is just a bunch of smaller little algorithms that tie it together. It's very complex, but you can reduce it to something as simple as ICT kind of demonstrated in that video. You could go watch it as well. It's ICT's Purge and Revert video. It's like the only one titled Purge and Revert. You could go watch this. Just understand there are certain things at play here that cause these things to happen. Okay, so in this case, the market structure break is this low right here. Okay, I want to move this over just a little bit. This is the market structure break low right here. Boom. Okay. So that market structure break, we need price to come all the way back down here and break here in order for us to start looking for some sales. If it doesn't, it could continue back up. Okay, so we're just going to go back to the daily. Until it breaks that, we're holding this bullish bias, okay? Until it breaks that, we are holding this bullish bias. Okay, and you could tell this next day, it didn't do anything. But to go back to daily bias, I do want to show y'all right here. Where is it at? Okay, so if price is bullish and the previous day was bullish, then the next day that we trade, we expect the previous day's high to be taken out and the previous day's low to be supported. In other words, there shouldn't be any movement below the previous day's low. Now, if price trades below the low, you want to wait for that day's candle to close. If it closes back above the low with the long doji wick or something that doesn't show any significance of going down, then you want to hold the same bullish bias to trade toward the swing liquidity from step two. That's the swing liquidity that we already have marked out. But if it closed below the previous day's low with a big bearish candle, then bias may be flipping, so go neutral. Not every day is going to be an up close candle, so we will hunt intraday with that in mind. And if a short opportunity arises counter trend to this bias, we can dial back our risk or just not trade it. It's best to learn to ignore these counter trend setups. This step lets us know what invalidates our bias and idea. So I have another one written here. To confirm our new bias. Guess I don't have it written. I thought I had it written. I guess I'm gonna have to rewrite that. But in this case, whenever like a swing high, like right here, is formed, it's possible that this next day will create another down candle. But of course, we're still bullish until that low gets taken out. Okay, so it's possible that the next day will open, create a bearish wick. This will be the Judas swing, aka manipulation, where longs will be accumulated for price to then expand and take out this daily candle's high as well as this daily candle's high. And it can expand where it can distribute out of the longs, and then price will potentially close up here. Now, of course, we already seen those candles, but I'm just kind of giving you the narrative as to why it's potentially going to go up. Okay, so we play it out. You can see that this candle came down, and was this one supported or was it swept? This one was technically swept. This one was lower than this one. So what happened was it opened, it took out this liquidity of this day's candle, and it expanded and took out the liquidity of these 2 days candles. So now that it's up here, price potentially, since this swing high was broken with this candle right here, price can potentially open. This will be the Judas swing, and it'll make the wick, and this is AKA the manipulation to accumulate some longs to then send price up, where price will distribute out of those longs and close around up here. And it will take out, if we delete this day and this day, it will take out this day. Okay, and of course the ICT purge and revert, it didn't close under that candle yet at all. Okay, so we're not looking for any shorts at all at any point in time right now. So we could even delete this for now, because it's just kind of messy. And like I said, we're expecting an open, a wick expansion, take out this daily's high, and potentially take out this liquidity up here. So this next day, we're looking for longs, no shorts. Okay, let's see. Boom. So we opened, created that wick. This was a manipulation. The Judas swing accumulated some longs, expanded through this liquidity. So now we expect this high, open, create the wick, Judas swing, manipulation, accumulate some longs, expansion, potentially take out this high and take out this high. But we expect this low right here to be supported. We do not want to see this low traded through at all. Okay, so let's see what happens. Wow. Okay, so in this situation, like watch, I have this written down in daily bias. So very rarely do you see the previous day's high and low both traded through. If it does, it's usually indecisiveness, or it's going to be a reversal soon, and it's clearing the board on both sides of the marketplace. So when you see this, prepare yourself for a potential reversal. So bias in this situation will be neutral. Our idea is invalidated. We will then redetermine the phase and where price is now headed. So in this situation, since it just took out the liquidity, took out this low right here, this candle that purged, we can drop to the 1 hour. The day that purged it, midnight was right here. This is the new purge area. So now we could implement our purge and revert and see when we can start looking for some shorts. So it actually purged because this was a high, and it purged that same, it purged during the Asian range, honestly, which is technically the next day. But you can see that the market structure happened. The market structure break happened right there. So the market structure break would come in right here. Technically, more up here, honestly. Let's say that we're referencing it back this way though. Okay, let's say that this is a market structure breakdown here. Okay, so now a market structure broke. If we go to the daily and we throw on the Fibonacci for the expansion to know where our equilibrium is, from here to here, our equilibrium is a 50, which is right here. And with our 3-day look back, you can see that this is the second day. Second day's lowest low is right here. And third day's lowest low until midnight. Midnight happened right here. So this is the third day's lowest low. And once price gets to the 50, it becomes lower probability. So right now it's high probability sells since it broke structure, and the structure is the first day's lowest low in this case. And now the next lowest low to target is this one right here, and potentially target down here. So this next day, this following day, I know we said that our bias is bearish, but since we have now market structure shifted, like on the Purge and Revert, we look right here. Now, when that low is traded through for the market structure break, we don't need price to close below it. Don't need that. Once that market structure break happens, then we can start looking for sell side liquidity for the algorithm to revert to. This is where our look back on the day of liquidity purge comes in. You're going to now target day two's lowest wick, the day's low, and the day's three's lowest wick, that day's low. But this is key. You want to add a Fibonacci on the daily range that expanded to purge liquidity. Could be more than 3 days. And to summarize now, once the day that runs out the daily liquidity happens, that is a potential purge. It is only a purge if price takes out that same day's low. You want to drop to 1 hour, which we did, creating a market structure break. At the market structure break point, liquidity is now purged. We will now look for sells to target the 3-day look back lows liquidity, because now we're thinking sell side liquidity will be the next draw. So our bias on a short term is to look for day two's low to be tapped and maybe day three's, but only up to the 50%, aka equilibrium point of the Fibonacci. So each day after the market structure break day, we are looking for the day 2 and day 3 pool of liquidity to be traded down to until it reaches the equilibrium point. And once it does that, high probability goes away. It changes so the algorithm goes into a different mode of delivery. And ICT isn't going to teach it. He doesn't teach that in that video because it requires way more. But ICT drops to like the 15-minute time frame in that video, and you could go check it out. You could go watch it. He drops to the 15-minute time frame to demonstrate how the day after our liquidity structure shifted, we began looking for like the buys in his video. But in this situation, we're going to be looking for sells. So this next day, we anticipate this candle to open, Judah swing up. This is going to be the manipulation and accumulation of shorts to sell off, potentially take out this day's low, and potentially take out the day two's low as well, which is right here. Okay, so let's see what happens. Boom. So price opened, created that wick up. That's the manipulation, Judah swing to accumulate shorts, sold off, take out day two's liquidity as well as this previous day's liquidity below the wick. And it distributed out of those shorts and it closed right here. That's the distribution, this wick right here. Okay, so now same thing. We could delete this now. All this liquidity is pretty much done. Now what we can do is we can anticipate price to open, Judah swing, manipulation to accumulate shorts again, sell off, potentially take out this day's low. We want to see this day's high be supported as like resistance technically. And we want to see price potentially sell off, take out this low, and potentially take out the day three's low as well. Okay, so let's see what happens. Wow. Okay, so in this situation, price took out everything really. Took out this high, took out this low, took out this low as well, the day three's low. So we were technically right about that. So there was a possibility we could have found a short position in here. After it sold off, if we drop to the 1 hour, you can probably see, yeah, after it sold off, it just, and that was the close of that day. And this came in around New York session just around London. London was 2 to 5. 2 to 5, it was already down here technically. It had already came down and then it shot up. But it took out all that liquidity. Look at it took out. This was a market structure break of the Purge and Revert. This was the day two's look back liquidity, took that out. And this is the day three's, took that out. That was really cool how it played out like that. That was actually really, really cool. So now in this situation, it did come all the way down to equilibrium. In this case, price is in a retracement phase right here, and that's why we were looking for some shorts. So now in this case, once everything has been taken, and again, in this situation, once price, very rarely do you see the previous day's high and low both traded through, but if it does, it's usually indecisiveness, or it's going to be a reversal soon and it's clearing the board on both sides of the marketplace. So when you see this, prepare yourself for a potential reversal. So bias in the situation will be neutral. Our idea is invalidated. We will then redetermine the phase and where price is now headed. So in this case, allow a day to play out and see what happens. Okay, so we'll allow a day. Right now, we've seen that the high was traded through and the low was supported. And if you've seen ICT's 2022 mentorship, is in there he explains how this three candles right here, since this wick and this wick were both higher than this wick right here, it looks like a face. Since it was higher than this wick right here, this is a swing low, technically. Okay, so it created a swing low. Now, once it creates this swing low, we can potentially see price begin to expand up. So in this case, I would probably demand another day's data just to get a clearer bias, just because of this big down close candle. But it's possible that price can open due to swing down, manipulate, take out this day's low, which is liquidity sitting below there, takes out that liquidity, and then it expands, potentially takes out the high here as well. But let's just see what happens. It could also potentially continue even lower for a deeper retracement into this range right here. But I would need to demand a little bit more data as well. So in this situation, ICT does say you don't have to trade every day. And it's true, you really don't have to trade every day. Sometimes you can skip out on a few days to get 2 weeks worth of, bias. And what do I mean by that? It could be like a few days where price is in like a consolidation, it breaks out one day, and then all of a sudden you're riding that bias for, a week or something crazy. And I know that's super far-fetched, but there's possibilities, you know what I mean? So right here, we're gonna demand more data. Let's see what happens with this next day. It did take out liquidity here, and it's closed up in here. So I would demand another day. You can see how price is going up in this situation. If we cleared out everything, let me just kind of delete everything because it's kind of ugly. Let's just reevaluate where we're at. We recently ran out liquidity here, right? Now we're retracing up into this range. The range is from here to this high, okay? We've hit equilibrium. It also lines up with this order block right here, but we're going to base it off of this order block because this order block didn't get respected, as you can tell by this wick. So we're not going to base it off of that one. We're going to base it off of this one. So right now, price tapped into that order block twice, and it's likely that price can begin shooting bullish. But right now, it's kind of indecisive. You can kind of see that price is kind of in this consolidation in a way, it can consolidate more and then all of a sudden break out crazy, so we have to kind of demand more data to get a better read on price, because once it breaks out this way, then we'll know we're bullish. We'll know that we're looking for buys. Right now we could say that we're looking for sells, but are we looking for sells? We've already hit a point of interest. We've already retraced to equilibrium. And at that point, sells become low probability. High probability goes off the board. And at this point, we don't know if buys are taking over just yet. Price isn't showing that just yet. So you have to demand more days. And this is where you got to stay patient. Let's just see what happens. See, just like I said, now it's consolidating. It did this, now it's just doing this. We want to see a breakout, you know what I mean? Let's see if it breaks out or does something crazy. We got to demand more days, more data. Look at what happened though here. So if you see, it built all this liquidity within that consolidation and built it up, took out this liquidity, retraced deeper within this. At this point, there's a possibility that the lower time frame could be creating a reversal, like a market structure shift, and we could potentially start seeing, some bullishness. But right now, the phase is still in a retracement phase. You could hold a bearish bias. You can totally say, if you wanted to, throw some balls out in this market and just say that with this, since price took out liquidity here, you could potentially say that this is going to either maybe we could implement purge and revert here, but ICT doesn't demonstrate that in his video, so I'm not going to demonstrate it here. But it's possible that you could implement some purge and revert here. But in this situation, you could also, maybe look for a sell opportunity. Price can open, Judas swing and manipulate up, create like a like Judas swing, manipulate up, create that swing high where it'll accumulate some shorts, sell off, and take out this low, and it'll distribute out of those shorts there. So this is where every trader differs. And this is where, you would have more rules to your bias. Like what in this situation, what would you do? Because it's also possible that price can continue lower because again, if we pay attention to like market structure shift points, this could be a market structure shift right here. Right? Market structure shifted, price retraced back up into this, sold off, price retraced back up into this order block, sold off, price could retrace back up into this 2 candle order block, sell off again. So there's many different possibilities right here. I would be looking for like a 1 hour market structure shift on the lower time frame. Matter of fact, let's see if we can find that to go bullish. And maybe we'll just end the video here with that. So price, this was a market structure shift point. This is a current market structure shift point. But then it made this one right here. So this is a market structure shift point, okay? Right here. So price takes this out with some displacement. We'll look for the fair value gap. Look for opportunity. Okay, so now this is a market structure shift point. There's your displacement candle. This next one creates the fair value gap. Boom, boom. We can look to take a long off of the tap of the fair value gap. Put your stop loss below here. Should be about 34 pip stop loss, right? And what could we target? We could target like the liquidity. We could target liquidity right here. Target liquidity up here. See what happens. Price taps us in. And it stops us out. Bummer. It stopped us out. So like, again, in this situation, we could be looking, to see if it's going to continue up because it did sweep out liquidity here. And again, like how we said, it could have been looking for a short opportunity too, where it opened, it Judas swing, accumulated some shorts and it sold off and it took out the low there. Like I said, it could potentially happen. And, now you can see how it did create that opportunity. If you look right here, it took out this liquidity on the 1 hour. Once it took out that liquidity, you could drop to like a 15-minute, 5-minute time frame. I would recommend 5-minute, and you could look for a market structure shift bearish, and you could have sold right there and caught that opportunity. Now, we're looking bullish because we're looking long-term, right? So let's just say we got stopped out here. We're still going to look for the market structure shift bullish. And look at, that's the market structure shift because this is your market structure shift point right here. And if this is confusing for you, I definitely recommend going and watching the 2022 ICT mentorship. And a lot of this will make a lot more sense. Okay. So once the market structure shift candle happens, I personally like to give it another, candle. So it could potentially make the fair value gap here and another fair value gap here. Let's see what happens. Yep. So it did that. This is your fair value gap 1, fair value gap 2. ICT says when there is more than one fair value gap, you want to take entry off the primary one, but you want to put stops where the secondary one in case price wants to run into it. So we'll put stops down here as well. It'd be a big stop loss, about 70 pips. Now, this is if you're like swing trading, right? If you like swing trading, this is for you. I'm more of a scalper. I like working on the lower time frames. Unfortunately, I can't go that low since we're kind of far in the past, 2021. So we're about 2 years back, but let's see what happens. Okay, we get tagged into our entry. I'm gonna just play it out now. We get tagged in. Price takes us out again. And you know what? This is a great time to remind ourselves. Get over the concern about being right every time. Put aside the idea of perfection because you're not going to have it perfect. You're not going to get in perfectly, get out perfectly. You're not going to have the perfect risk, the perfect asset, etc. You will always find reasons to be wrong. Embrace imperfection. Embrace the idea that you don't have to know everything. You don't have to be right. Being right is not equivalent to being profitable, and that's important. Okay, these are the words of ICT. So we were wrong in this case. Now, if we go back to daily, it's obvious that price is now like reversing. Once it hit that market structure shift, it then continued, selling off. If we delete everything, watch. And we kind of just go back and kind of understand where we went wrong. That's your liquidity one, right? After the run of liquidity, here's your market structure shift. Right? And once it shifted, it retraced back into this order block. Boom, boom. And right there, you could have looked for a 1 hour opportunity to sell there. And then price ended up retracing back into this 1 hour or daily order block as well. Boom, retraced. And then it ended up retracing back into this consecutive 2 candle order block right here. And I mean, technically, I could have drawn it at the wicks there. You can see, boom. So if we went to the 1 hour just to kind of show you guys how you guys could have taken advantage here, and then I'll kind of end the video here. If you go to the 1 hour, once it retraced initially on the first one, where's the market structure shift point? This is your market structure shift right here. Market structure shift. This is your fair value gap. You can see that this candle tapped into it. You could have entered, had your sell limit set, and then price would have tapped you in. It would have been about a 38 pip stop loss. And then you could have targeted these lows down here. And obviously it hit that, you would have hit about a 1 to 4 hour. Now, let's say whenever it retraced back up into this one, right here, let's see where you could have been a seller. It retraced up. Market structure shift point. There was no fair value gap within here. And then it took out more liquidity right here. And then this is your market structure shift point here. Boom. Market structure shift. Created your fair value gap right here. Boom. Boom. You could have been a seller. Once it tapped into that, boom. Stop loss would have went above here. About a 52 pip stop loss. Boom. It would have been about a 1 to 3 R, way more obviously. And then once price retraced back into that other order block on the daily time frame, you could see that this was the market structure shift point right here. Once it shifted, there wasn't no fair value gaps here. Instead, price went up a little bit more. Didn't take out no more liquidity, but it also didn't respect the order block. So in this case, I would say that that market structure shift was invalid. So I would look for another one. You can see that there's a market structure shift right here. Here's a fair value gap. Price totally took out everything. You would have been wicked out. So let's say that you got wicked out. You would look for another market structure shift. And here it is right here. Market structure shift point right here on this candle. Created a gap right here. Boom. Small one, but it's still a gap. Created another gap right here. Boom. And we could have took entry off that primary one. Stops would have went above here to consider the second fair value gap. And boom, another 1 to 5 bar. And that's how you could have taken advantage there. So where did we mess up? We messed up by not recognizing that price wasn't retracing, price reversed. This was a reversal right here. So from here, all of this was bearish. We were looking for bearish in all of this, okay? So that's where we went wrong. And, you know, everybody makes mistakes. I make mistakes. I hope you learned something from this mistake, and I hope you learned something altogether within this video. I'll leave the links to the documents in the description below, so you could check out the daily bias document. You could check out the Purge and Revert document, and go and check out that Purge and Revert video. The daily bias, I also based it off of like 3 of ICT's daily bias videos. I've taken notes of all of his, you know, majority of his information and kind of compiled it to kind of put together more of a better, more advanced approach. And I believe that this will long-term provide profitability and consistency. So again, if you like the video, make sure you leave a like. And if you're not subscribed to the channel, hopefully we earn your subscription here. Until next time, thank you guys for watching.